Hello, everyone. Good morning, good afternoon, good evening to all of you. This is Stock Mentor Neo, and today, what am I going to present is really a very different type of strategy, wherein you can really make money on the U.S. stock market, regardless of the direction of the market. So it means that we don't care where is the stock going. We don't care if it will go up or if it will go down after the earnings is reported. So sounds interesting, right? So that is really possible, guys, and it can only be possible using an option trading strategy called a delta neutral option strategy. So some background about the earning season. So last week, the earning season at the US stock market just started, and because of that, usually if stock is going to report earning and the earning was has beaten the expected or forecasted earnings, and at the same time the estimate for the next years or for the next quarter is also positive, then it is possible for a stock to gap up or skyrocket. So you will notice in the US stock market that these famous stocks sometimes, like Tesla, if they will report very good earning about great results of the previous quarter in terms of sales of the cars and very positive forecast about future sales, increasing sales, and many more. So this usually is resulting to the gap up in stock price after the earning is reported. However, on the other hand, if the result is bad, then the stock will go down. And if that is the case, you can take advantage of the downward move if you are trading on the short side. But of course, if you are trading in the long side, it can be very, very damaging to your it can create a loss on your trade. So it might result to a loss on your trade. So earnings season usually is very unpredictable. We really do not know how the market will react after an earning is announced. So one example is last week's earning report of Netflix. It has reported a very, very good, not very good, but it was quite bad results. And they also admitted that the competition is hurting the results of the company. So the competition, the income of the Netflix as a company, as a streaming company, is being impacted by competitions. So for example, recently nag-announce yung Disney that they are going for this streaming, online streaming video on demands. Nandyan pa yung HBO Go. There is also the Showtime. There are also other competitors, big competitors. Amazon and Apple as well is planning to open such kind of business. So earnings basically is very unpredictable. So it is actually a binary event. So it means that the outcome might be good and might be bad. So if you are betting for a one-sided trade, for example, you are betting that it will move up, then there is only a 50% chance that you will get that kind of result. That the result of the market move will go according to your direction. There is a chance that it will go to the opposite side. There is also a chance that it won't go anywhere, so it will go just neutral. So in that case, since earning seasons is very unpredictable, it makes sense to create a strategy which is very, very neutral. So we don't care about the direction, we just go neutral. So why is it so? Why is it that how can we earn from that neutral strategy? So do I mean that if the stock won't go anywhere, it won't go up or it won't go down, and you can still make money? Yes, it is. It is very possible. Options are called derivatives. They are, instead of aside from being right with the direction, you must be right as well with timing. And there is the very important thing to understand in option trading is the implied volatility, and how does it affect to the pricing of an option. So implied volatility is the volatility of the option price. So again, by the way, just to give you a background about for those people, for the advantage of those people who did not follow my previous part of my live session, in which I have explained what is an option. So an option is basically a derivative. It is still related to stocks, but it is in a form of a contract. So instead of buying 100 shares, we make an option. We make a contract that in that contract, you can, if you buy that contract, you can control 100 shares of a particular stock. So every option contract is equal to 100 shares of stocks of a company. Now there are two types of options, the call option and the put option. If you buy a call option, it means that when you buy the contract says that, and if you are a buyer, it says that you have the right to buy a particular stock at the specific price within the given period of time. So if your expiration of that contract is 1 month, and if you buy an option contract, it means that you have that right to execute the contract. So you might want to convert that contract into stocks. So when you are buying an option contract, it comes with a price, which is called an option price. And normally it is lower than the stock price. So if, for example, Apple is trading at 220, the option contract of Apple for the at the money, for example, the 1 month expiration of a call option, and the current price is 236. So 236 here is very close to 235. So walang 236. There is no 236 as a strike price. So strike prices comes with divisibility. So or intervals of 5 or 2.5. So for this particular time frame, which is 40 days out, you have this different strike. And the at the money strike is a strike price which is equal or almost equal to the market price. So what is then the strike price which is almost equal to the market price? So that could be the 235 or the 237.5. But this one, normally I will take the one which is much lower than the current market price. So the 235, because it is already in the money. So 235, it has only a price of between 8.2 and 8.55. So this is the bid and ask. If I want to get filled right away, I will bid for that 8.30 or 8.4. So my trade will get filled. So what does it mean? I will pay to the market, to the seller of that option, of call option, an amount of $8. So let's say 8.3. I multiply it to 100 because every contract is equal to 100 shares. So 8.3 times 100, that will be the cost that will be incurred into your trading account if you buy an option contract which is at the money. Now, if you are buying the call option, if you are very bullish on a particular stock, but if you are bearish on a particular stock, then you buy the put option. Why? Because the put option is a contract, and if you are a buyer of a put option, you have that right to sell. So instead of a right to buy, you have the right to sell a particular stock at a specific strike price, which is, let's say, 235, and you need to execute that within the time frame before expiry. So normally, if I am buying a long option, it's called a long option because you are buying, I allocate more than 30 days out. So it should not be 5 days only or 10 days. And the reason is that in option, there is an expiration, and the lesser time you have for that option, the greater chances it is that it will shrink to its value. So kung mayroon ka lang maliit na time allotment or expiration date or number of days out, so kung mayroon ka lang less than 30, ang nangyayari sa option is that it is really decelerating its value at the fastest rate than ever. So therefore, I am buying a long option which is more than 30 days, so 40 days or 50 days. So that is the strategy in case of long options. But do not play too much with buying long options only. You should apply it only if you are very, very bullish on a particular stock. If you believe about a particular stock within a short period of time, let's say 2 or 3 days or 5 days maximum, you believe that the stock will explode. Because if it won't move within that time frame, you will be losing slowly, gradually decelerate or gradually decrease the value of the option. So kaya nga, in option trading, because of the time decay, it is much more advantageous for those traders who are selling options instead of those who are buying options. All right. So in my previous video, if you haven't watched it, try to watch it, because there I explained why is it so that option is more profitable when you are selling than when you are buying, right? So our task for today is not, our topic for today won't cover that. So I'm just giving you background info about options, right? So back to the topic, how can we earn from these earning seasons in the US market without considering the direction where the stock will go after the earning is reported. So let me give you an example. So Netflix basically reported last Wednesday or Thursday ba yun? So 17, so they reported on the night of Wednesday, so 16 after the market closed. So before October 16, normally the implied volatility of a particular stock which is about to report an earning is really extremely high. Take a look at this table here. This is Netflix, and the green one is the implied volatility. So What is an implied volatility? So volatility is basically the range, how it is fluctuating, how a price is fluctuating upward and downward. So that range is the volatility. And why is it that the volatility or implied volatility is so high before the earnings? It is because the people, the traders, the market makers are pricing in the stock as the people are anticipating for a move, uh, a kind of move which is more than its normal. So the people are basically speculating whether uh, Netflix will report good earning or bad earning. And because of that, market makers are pushing the price of an option, pushing the price of an option higher and higher, and that pricing of an option is directly proportional to the volatility in that particular stock. So this is that one. So this is dated October 16, exactly the day before, the hours before Netflix reported the earning October 16 after the market has closed. But as you can see, even a month ago, 1 month before, from September, the implied volatility started to spike high. And what I said earlier, the implied volatility is directly proportional to the option price. So meaning, if you were a buyer of an option 1 month before the Netflix reported earning, you might have been gaining value on your option that you bought, because it will increase and increase. Look at that. The volatility was 43% 1 month ago, and after 1 month, it spiked to 90%. So that is almost double volatility within just a period of 1 month. But take a look after after the earnings was reported. Take a look. Notice what happened to the volatility from 90% down to 32%. That is 3 times drop in implied volatility, which means that the option price dropped more than 3 times within one night. And again, I told you that implied volatility is directly proportional to the option pricing, meaning to say this amount of drop, you can make money regardless of any direction where the market is going. So this is the theory, the basic theory on how we can make money on options without taking into consideration the direction where market is. So implied volatility is directly proportional to the option price, especially when that kind of drop, this drop, it's called an IV crash or implied volatility crash, and it's happening during earning season or any kind of events that is connected to the stock or ETF. All right, so right now I was able to explain to you how the implied volatility affects this the market or any stock. So next week there will be other companies that are going to report earnings. So ito yung tinitingnan ko. So earning calendars. Of course, yung tinututukan ko dito are really stocks na talagang well known to everyone. Kasi if it is well known, there's really, most of the time, it is very liquid, highly liquid stock, highly liquid option. So makikita nyo dito na on Monday, American Bank, ano pa dito yung mga, what are the other famous names here? Okay, check here. Maybe some of you are familiar with other names here. So I will just try to get those which are really well known to everyone. So this is October 21. So let's check the Tuesday. So Logitech, it's also a known company, electronics. What else? So I think there is a big name which is going to report next week. For instance, this ALGN is also very a good stock, very liquid option. Okay, Microsoft. So Microsoft. So tingnan natin yung Microsoft. Ano nga ba yung implied volatility ngayon ni Microsoft MSFT? So I'm pretty sure I'm going to trade this with the strategy that I have used for Netflix. So by the way, the result of my Netflix trade, I will show to you the chart what happened to the Netflix stock. After the earnings reported, so not this one, this is another stock, X, MSFT, Microsoft. So take a look at what happened to Microsoft. So 16, and sorry, Netflix wala. This was 16. This candle here, the green candle, is the candle before the earning was reported. And after the earning was announced, you see it gap up with around 8%. However, this gap was just dumped or sold off. It just sold off after during the day. So makyat hanggang 308, tried to bounce but nagtuloy-tuloy dito nag-close. So what I did was to use my iron butterfly trade, which I have already posted in my Facebook page, and the center point was 285 with around 15 points plus and minus na wings. So I'm going to show it here para makita nyo yung actual na trade. So for those who are not yet following my page, you can click follow, or you can simply add me as your friend. It doesn't matter to me. So this Facebook page of mine is really dedicated for trading trading stuff. So it's okay to me. I can accept your friend request provided that you have a legit profile. Kasi may mga nag-send sa akin ng friend request which are, you know, bogus or fake profiles. So I don't really used to accept those type of friend requests. Gusto ko yung authentic na profile. Alright, so this was my Netflix position. You see, I have sold call 285. I sold put at 285, and I placed protection 295. That is 10 points away from my short strike, and another 10 points below. So bumili naman ako ng put below 10 points below the short put. So this strategy wherein you are selling call and put at the same strike price and buying the same wings, same distance from the short strikes. So in this case, 10 points plus and minus. So I received a credit of $1,800. So this credit, you know, guys, if this happens that October 25 mag-close yung Netflix very close or exactly at 285, I will get all this amount. So this amount is an amount that was paid to me by the option buyer. So I am the seller. And now, since I get this payment, it will be credited right away as I open this trade to my trading account. So 1,800. So my job here is not to give as much money to the market than this. So I want to keep this amount as much as possible. It's okay to give back half of it. In that case, I will still gain $900. Or it's okay to give just 3/4 of it, and then I will keep, let's say, $400. And as you can see, right after the report was the earning report was announced, the next day I already got this unrealized profit of $400. So quite nice. Although at the end of the market, when the market opened, since nagkaroon ng really fluctuation, actually this thing is good. So what happened is I sold 285 and I placed a protection at 295. So this green line is my protection, and 10 points below 275. So itong mga green, ito yung mga wings ng aking iron butterfly. So ito yung center point na 285. So it means that if the Netflix stock will just move fluctuating here till October 25, I will get the best profit what I can, especially if it really close in between. I will get $1,800 profit. That's the max profit that I can. But of course, usually it won't really close exactly. It might close here or it might close here. As long as it's not going above or below that, these wings, you will really make money from this trade. So, ang nangyari kay Netflix, as you can see, up siya the next day. Pero nag-close siya dito lang sa 293. So, still pasok pa rin siya sa in-between. So, makikita nyo, from here, this is my center point. Dito siya nag-close. So, cleanose ko na yung trade ko. Ayaw ko nang i-expose, magkaroon ng exposure the next day. But I was actually wrong. So, kung naging much greedy pa ako, I would have been profiting more than this one. Kasi the next day, bumagsak pa si Netflix. So kung titingnan nyo, dinaanan pa nga niya yung it has passed by to the center point. So meaning, I could have profited more from Netflix. But it's okay. I just really executed my plan that the next day I have to close that trade, whatever the position is. So, syempre may mga trade tayo na mapupunta dito or dito. So it really just the matter of executing the plan. So what happened naman if it closed here or it closed here? The thing is that I will have a lesser risk. So yung trade na to, it doesn't mean that you won't lose. You will still lose, but minimum amount. The risk reward here is basically around 1:7. So I might lose around, my calculation was $200 loss for Netflix. So but that $200, so I said I can take the $200 loss if that would be the case. But if I have been given to 1:7 risk and reward, that is a pretty nice risk reward. So meaning to say I have only a really low chance of losing the trade, which is right. So it's just really a statistical probability when placing the trade. So right, so that is the Netflix. What about what will I do when it comes to other stocks? So as I said, the next one that will report is Apple. I know not Apple, but Microsoft. But tingnan natin si Microsoft. Ano nga ba yung situation niya sa implied volatility? As you know, tingnan nyo, Microsoft, you see, nag-spike na yung kanyang nagre-react na yung kanyang implied volatility. So, a month ago, it was only 24%. Ngayon, up na ng 35% na. So that is a 10% difference in the implied volatility. So not as high like Netflix, but we can check also that how the historical volatility of Microsoft is moving over time. As you can see, nasa middle siya. So maaari pa siyang umakyat dito. So ito naman yung low niya, ito yung high. Nasa middle tayo. So there is still big chances that the implied volatility will go higher as the earning date is coming. So yung date ngayon is 20 at yung Microsoft is going to report earning on October 23. So 3 days from now. So 3 days from now, it is possible that the Microsoft implied volatility will still move higher. So before mag-close yung market, I will be placing that iron butterfly trade. So tingnan nyo naman, si Microsoft, yung previous earnings, ito, what happened? Gap up pero sell off. Previous earning, so tingnan natin, gap up, then next day bumalik. So there is really that tendency of Microsoft to gap up but go back to the same place. So if I implement that strategy, what I have showed to you, it's called the iron butterfly, then it's really possible to make money on this trade without predicting which direction it will go. So let's plot the support and resistances here first. So I'll just plot some support resistances. So these are the very obvious resistance, and this is very obvious support. So you can see it is so this is the tendency of this stock, chop, go sideways. So within that range, kakaroon siya ng sideways move. So it's possible that later it can still go here, or it can still bounce back up before going down. So we really don't know which direction it will go. So because of that, we can implement a strategy which doesn't care which direction the market will go. So the iron butterfly is perfect for this type of scenario, especially that this is a sideways market. Remember that I think Netflix is not a sideways market. Let's check. It's even a downtrending stock, Netflix. It is only trying to break the trend line here, but it failed. So alright, so how can I set up this iron butterfly for MSFT, so for Microsoft? So I will show to you guys. This is a very rare opportunity that I am showing it here live. Just right now I have really the chance to show it to you, because many Filipinos are not aware about option trading, and there are only very few people in the Philippines who knows option trading. And I would like to be really the catalyst that many Filipinos will learn this, because in US it's really very, very famous. It's even more famous than stock trading. It is because of its a lot of things you can do in option trading that you cannot do in stocks. And of course, you can combine your skills in stocks and skills in option trading, making you a really powerful trader. So yung mga hedge funds traders, gumagamit itong options. So you can use option for hedging. In fact, I'm doing the same. If the market is bad, I use options to hedge my position. So meaning to say, to minimize the risk of downsides. I hedge my long position with positions which are making money on the downside, making me neutral, so not too much affected with the volatility in the market. So that is the main reason why I trade options. So a lot of things that you can really do in options that you cannot do in stocks. All right, so let's show. So since I showed to you that Microsoft is going to report earnings on October 23 after the market close. So itong moon, the symbol dito means that it will report on the market close. So meaning to say, 1 or 2 hours before my close, we need to set up our trade. So let me show to you how. October 23, so October 25 is a good date kasi it is already after the earnings is announced. So it will expire only after the earnings is announced, the Friday of next week. It can also be this one to give you more time. So this one, after the earnings is announced, October 23, you will only have 2 days left for you to give more time for your trade to adjust. What I mean here, because if you see here, this one, July 18 earnings, what happened to the stock is it got up, but it went down. The good thing is it went down right away the next day. So you will really make big time money here if you place the same strategy what I have used. So if you have sold the short strike here at 136, then the earning was announced, nag-gap up siya, but bumalik, you will for sure make big time money here. But sometimes before siya bumalik, it takes more days like this. So if you sold you have a short strike here, 125, so more days muna yung more days passed before it really went back to the original position. So as you can see, Microsoft has really a tendency to gap and then go back to the original position, and that is what I'm going to do here with Microsoft in the next earning. So it's possible that if the earning is good, it will gap and then go back to the same, but you all really don't know what will be the result. So that's why we are going neutral trade. It can also gap down and go back to there. So we don't want to risk which direction will it go. What we want to take advantage of is this very high implied volatility here of this option. So I'll show to you. So this very high implied volatility of Microsoft. So we expect that this one will drop maybe more than 10% drop. So because of that, let's set up a trade for Microsoft. Okay, so let me delete some unnecessary lines here para hindi magulo. So let's figure out first our support resistances. And then we have some trend lines. Okay, we have some trend lines here as well, very high angled trend lines. So sa 1 hour makikita mo yan breakdown. So basically bumalik sa gitna yung price between this range. So that's really nice. So why don't we sell this current? So of course, there will be still 3 days more before mag-earning report. So I would wait until October 23, mga 3 hours or 2 hours before earning. So it means that the market can still go high or go low. So susundan natin yan. So let's see, in case let's assume that the Microsoft stock will close at be at 137 na lang on October 23. So we will be selling this. So I sell 137 call and sell 137 put. Okay, so that will be our short strikes. So this is basically in option, it's called the short straddle. But since we are putting protections on both sides, so both sides may protection tayo, it becomes now an iron butterfly. So long call, buy, long call at let's say na lang 1 for 1 kasi nasa resistance siya. And then buy long put at let's have an equidistant wings 137 141, that is 4 points difference. I mean $4 difference. So meaning that 137 minus 4, that will be 133 exactly at the support level. So this is really, for me, this is really a perfect combination. I mean, perfect setup here for my iron butterfly. Kasi sideways yung market, ranging yung stock. I assume that the stock will just, stay in between these two range. So hindi siya aakyat, hindi siya bababa. And if in that case lumagpas siya both sides, I have a very minimal risk. So how about that? So having a 1:5 or 1:3 risk reward, that is pretty awesome, guys. For those of you who are really trading in the market, even 1:1 is very good. How much more if you are given 1:3, 1:5, 1:7 risk reward? I mean, risk reward, that is pretty awesome. So let's do it here. How can we apply that in my platform? So I'm using interactive broker. I will give time like November 1, 12 days before expiry. What I'm going to do is I sell the 137 call, so which is costing 3.4, between 3.4 $3.5. So I sell that. So I toggle this sell, and then the put 137 I also sell. So as you can see, the put has a lower price than the call, but it's okay. We still have to choose the same strike. It should be the same strike. And then protection 137, $4 above is 137 plus, so 141. So 141. So this time we won't be selling, we will buy, because it will act as a protection. So I won't go into details why is it that we need to protect this. So basically this is all about risk management. So we put protection. It's like an insurance that whatever happen, skyrocket man yung price, hindi tayo malulugi, hindi mag-explode yung account natin. That's why we put protection. But as you can see, we are buying protection at a much lower price. If we are given a credit of this 3.4 but we pay 1.6, so mayroon pa rin matitira. So that is the spread that we are getting, the amount of money. So we pay for protection, diba? Although it's minimizing, limiting our reward, but it's really all about risk management. You pay for protection to minimize your risk. All right, so what about on the put side? We also need to protect that. So 137 minus 4, that is 133. So we will buy the 133 strike. So you see the price is almost this, price is 1.48, 1.5. So buy 141, buy 133, put. So we have now an iron, in my platform it's called Iron Condor, but the proper terminology for this type of strategy is actually an iron butterfly. An iron condor is a option strategy wherein the short strikes have some distance to each other and these are equal. So like this one, 137 and 137 put call are equal together, meaning that it is an iron butterfly or iron fly in some other books. So let's analyze what is the risk and reward. So for one lot of this, so ito yung setup. You can decide how much do you want. Do you want 2, 3, 4, and it all depends on your account size. If you have a bigger account, you may sell more. If you have a smaller account, you should sell lesser because it's also position size. So now let's analyze. So this tool is very good to analyze the trade profile. So profile, this is the one. I'll pull it out for you kasi hindi siya makita. Alright, so ito yun. Ito yung profile. As you can see, return to risk is 3.5. So meaning that we have 3.5 times reward than its risk. Right? So it's 1:3.5 risk and reward. Again, guys, for those of you who are already trading, 1:2 or 1:1 risk reward is even pretty good already. How much more, guys? 3.5. That is pretty awesome. With this trade, I'm only going to have a max loss of $89 and max return of 311, guys. I would be willing to lose $89 if I have the probability to make 311, right? So that's the point here. You see the break even here. If the price will stay on 133.89 or 140.11, you will just break even the trade. So you won't lose anything. Okay, 133.89 and 140.11. So this is the break-even point. Pag lumagpas dyan, so you will start to lose money. And our max loss is only 89. So again, if you have a bigger account size, of course, it makes sense to buy more. So let's say you have $100,000 account portfolio. How will you calculate your position size? So usually I don't go over 5% of my total account. So 5,000 or the normal is 2% only of my trading account. So if I have 100,000, I should deploy only $2,000. But this is only 400, so I can still have around 2,000 divided by 400. I can place 5 lots. I am just exposing 2% of my account portfolio. So 2,000. So what will be now the max reward if you have this type of or you have this account or position size? So what is the risk reward? I mean, what is the risk reward is still the same. My max return is now much? Yun ba yung nagay natin dito? We have 5. So now my max return is 5 times than the smallest position. So that is max return $1,556, and then max loss is only 444. Okay, so but this max loss, it doesn't mean that if it goes up or down, you can immediately get this max loss. You can still minimize this max loss by putting a stop loss. You might want to have only this. It's okay also. It's possible. Yung max loss dito is really the worst case scenario. If, for example, nalugi yung stock, drop down to 0 value, then this will be the max loss. So meaning that or if the stock will really be far away from the center point where we sold our iron butterfly. And that center point that I am talking about is the short strike, which is 137. So what is the probability that Microsoft will really skyrocket? There is very little chance kasi as you can see, yung Microsoft na stock is really a boring stock. Because of its boringness, we have the advantage. So we know that it's a boring stock. It's not the kind of stock na skyrocket. Although here may mga instances na nag-top up siya, pero how much percent? 9%. So may mga time na talagang uptrend ito. But this time is not that time. That is a sideways market. And there is a probability that within a short period, within 1 week only, which is our expiration is November 5, there is no chance that it's really going to gap up. And it means for us, that this $444 is a very little chance na mangyayari yan. Plus, you will employ a stop loss. So, you can have a $220 max loss only pag naglagay ka ng stop loss. So, quite good, right? So, with $2,000 deployment of your account, you get this max return. And this max return, if you get this, that is around 70% of your capital within 1 week, guys. Within 1 week. That's what I'm talking about. So this is the thing that you cannot do in normal stocks. You can do it in option trading only. All right. So that is one of the power of options, and this is the reason why I'm trading this. So all right. So let's go back. So how are we going to submit that order that we have placed? So we have already known that it has a risk reward of 3.5, and that's pretty good. So what we want for the stock Microsoft to happen is the best is really with on the expiration date, it will close at nearly 137. If it is not exactly 137, at least nearly, we will have max return of 1,800 almost. How about if it goes here? So syempre, mahahati yung ano natin, max profit. So, instead of 1,800, 900 na lang. How about kung mag-close siya dito? Instead of 900, magiging 450 na lang. So, guys, within 1 week, $450, what is it to you? That is a fucking very good money already. And you did not do anything. You did not even need to monitor this trade. Because what is concerning to you is that hindi lang dapat siya lumagpas 141, hindi lang siya dapat lumagpas 133, plus maglagay ka pa ng stop loss, you are pretty sure you will only lose a maximum $200. So, for this, for 5 lots. So, yung sinasabi ko na max loss of $200 is for 5 lots. But of course, if you have only one, it's a different story. So if you have only one lot or position of your trade, your max loss $89 can become only $40. So you see this graph, ito yung nagpapakita ng max loss mo is that if the option expires and the price of the stock is at 137, that is giving you $300 for this one lot position. So let's go back to our 5 lots position. Kasi ito normally yung trade size ko. Alright, so see? Okay, so if the stock will close, okay, hindi pala nakikita kasi nasa ano. Okay, just a moment, I'm trying to pull this up. So this is the performance graph. So ito yung strike prices. So ito yung price ng stock. So if it goes, if the stock will close at 137, ito yung 137, during the expiration date, you'll get $1,546 max profit. How about if it closed only at 138? You'll get $600. How about if it closed at 140, you'll get okay, so ito na yung you'll start to lose money. So you need to stay at this. Ito yung may line above zero. So if mag-close ng 139.88, you'll still have 100. If mag-close so 134, you'll still have 167. What about if it closes here 135? You'll still get 830. Not bad, right? So, and without any kind of monitoring, you just care about the two values here that I have shown to you. You just, yung break-even points, yung two values, performance profile. Ito yung values natin, 133.89 and 140.11. You will just be concerned if the stock will move up on the expiration date above that. But if it's not going there above, you'll be in a pretty good position and profitable position. Right, so now how am I going to execute the trade? As you see, with this trade, I will 5 positions. I will set the GTC, and this is the bid and ask. So of course I want to sell it as high as possible. So, and of course I don't want to go out from this range kasi baka hindi ma-fill. So I will just go to the center around close to the $30.37. So negative because it means it's a credit. If it is positive, it is a debit, so you need to pay. This one I need to be paid. I am the one who will get money, not the one that I will pay. All right, so so I have a 3.30. I am bidding at $3.30. So of course you multiply it into 5, that is around 1,500, which is our max credit. So again, profile, check it, show you. I will get a max return of 1,556, and these are my commission. Is it will, since it's quite 5 times 5 lots, so every lot is $5 commission, so you need to pay $25 for this trade, and to close it is also $25. So I am trading at a relatively bigger position. So if you have a smaller account, then you need to reduce that into 1 or 2. So you don't need to follow like what I have here, because we don't have the same account size. All right, so I wanna submit that, and next week it will get filled. I will be happy. So that is my, since I'm bidding at negative $330, this will be my max credit. So boom. So ayun, submitted na. It will come here to my orders, and that is that trade. So you sold 137 call, sold 137 put, and protection of 141 call, protection of 133 put. So right, very nice, right? So that is all about so-called strategy called iron butterfly strategy, which is really very good for earning season. And I'm also planning to do the same with other stocks, like ano pa yung magre-report next week, eBay, also eBay. So if you see here, eBay, what is the implied volatility 1 week before the earning will be announced, you'll see that eBay is already spiked. It has a spike up volatility, pump up volatility, very high. So ito yung next month na volatility, ito yung December volatility. But yung next week na volatility is extremely high. So what else? So ito yung mga pwede kong kunan ng profit next week. Ito pa yung Cetric system. Ito pa. So what about Tesla? So we can check Tesla. Tesla is Tesla and Google and yung FAANG stocks, Facebook, Apple, Google, and ito. So when is the earning? Next earning is October 23, Tesla. So tingnan nyo guys. That's what makes this very interesting. Especially Tesla kasi well-known stock. Tingnan nyo. Yung next month na volatility is only 52%. December volatility is only at 46%. Pero yung next week na volatility is almost double than the next month volatility. So this is a very good candidate as well for my iron butterfly. So I am expecting that after the earnings reported, this will drop. So just like what happened to Netflix. That one. So this is my expectation. All right, so that is, guys, all about option trading, particularly the iron butterfly strategy. Now, if you think that this kind of trading is very interesting and you would like to learn from me more of my strategies, then please feel free to write me a message, because I'm actually doing one-on-one session for these topics. We can start from the very basic, and I also do coaching. So while you are practicing, you can ask me questions. You can also ask me questions about how to open account and what are the brokers which are good for this. So the good thing with this option trading is really that that advantage that you have, that you really don't need to be pinned in front of your monitor, kasi it requires only a minimal supervision, dahil sa you have only some values that you are concerned about. So mag-break out sa 141, breakdown sa 133, that's all. You don't care about what will happen next. What you care is that you just want the price to stay in the range, or stay above a certain value, or stay below a certain value, right? There are more really nice option strategies that I can teach you, especially the kind of option strategies that you are acting like the insurance company. So it means that you are only paying back to the market if there is something that happened bad to your trade. But most of the time you have 80% chance of success for that trade. So this is called the credit spread strategy. And you can generate consistent monthly income with such kind of strategy. All right. So again, guys, if you would like to learn from me, from my strategies, then feel free to write me a message. Thanks, and have a nice Sunday to all of you. God bless.